All the content on this channel is for education or entertainment purposes only. It does not constitute financial advice. Always remember to conduct your own research. In today's video, we're going to get into the UK ISA portfolio, which is my income portfolio. I hope you guys are ready because there's been a lot of changes since we last did one. I can't remember how long ago it was, but this feels like it's all fresh again. Let's get into the portfolio review. The net worth for the UK ISA only, I will break this down a little bit. There's now 3 portfolios. Hopefully you've watched the video before this is released. I'm recording this on the 12th of September, the video before. Hopefully you have watched that and you understand that there is now 3 portfolios all split up. The value isn't down, it's just because I've split the portfolios up now. So the value right now is £45,509.08 and the total profit is £5,840.31 and that is up 9.6%. So I have sold a lot of the income shares products and funnily enough my TR is now up. And I think in the last year we've all learned quite a lot to do with income shares. The old strategy wasn't working. I feel like my old portfolio would now be 3 times what it is on total return than if I didn't invest in income shares. Unfortunately, that is a lesson that we have all learned the hard way, especially me, because I have just wasted a year of gains, basically a full year where the product really didn't do anything for my portfolio. But this is how we get better and we learn, unfortunately. The yield right now is 33.6%. The annual payout is £15,133.63. I am heading for £24,000 annual. That is going to be my target for this portfolio moving forward. So let's have a look what assets we've got in so far, because we really have cut it down. We've got 1, 2, 3, 4, 5, 6. We've got 7 assets only, and that is including cash. So we haven't got a lot of holdings up to now. But one honourable mention I do want to say, look at this, Tesla ETP up 6% today. And I've just been looking at this. The one day we're up 6% on Tesla. Wow, crazy. It looks like the new strategy is working. I hope it does, because you'll see in this portfolio review that is one that I'm actually stuck on and I'm trying to average down right now to get out of it. So we've got Main Street Capital, we've got 79 shares. We are up 12.03%. So we're up on capital gains, £234.96. Realised now £618.25. The dividends received at £129.45. And the taxes minus £16.55. And the fees paid are minus £18.53. The allocation is 8.6%. I wouldn't worry too much with the allocations moving forward, because this is only going to be a small part of the ISA. This is probably going to be 25% of the ISA. So eventually all these allocations won't really matter that much, because the growth portfolio will be bigger than this. So my next asset is FEPG, which is the Rec Shares Tech Innovation Premium Income FEPI, but it's just in the pounds version. So I'm up 0.94%. As you can see, I've not actually had a distribution yet because I was watching the data on this one. I didn't want to jump into it and get burned again. So what I've basically done is I've been watching the data. I've really liked what they've seen. I've been watching interviews with Rec Shares, and I really like how they talk about predicting the NAV. So I think this one's going to do great. FEPI's done great already in America. So yeah, up 0.94%. I was up about 3%, but I've just averaged up because I wanted to get my allocation a bit bigger. So that is a 10.75% allocation right now. Then we've got YMAP, which seems to be doing all right. It did have a bit of a drop, but it was just the underlyings that dropped. We have 300.11 shares of YMAP. That is up 0.25%. We are down on capital gains, minus £201.12. A real nice P&L of £58.31. And dividends received are £310.75. So we're up £51, which is a sound. And then we've got £462.10 in cash. And then Smith is another one I've just added. I've just added 50 shares in there, just for some stability payments in there right now. So we have 50 shares of SMIF, which is the 24 Select Monthly Income Fund. This pays about 7 to 10% monthly. It's a business that sells private equity and private credit. Currently just down 0.46%, down 20 pence, but we have not had a payment or anything off them just yet. So let's get down into the nitty gritty. I sold out of the 0DT puts. I think I was down 0.51%ish. So I was really happy to get out of those. Then I had Nvidia ETP. And that was up 15-20%. It did really good. But I was just happy I could take some profit from income shares because I hadn't seen any for the last year. And that is the honest truth. The only thing that's ever been up, including distributions, was Nvidia. That is one. And that was only because Nvidia asset went up. We was still on the cap strategy when I was in total returns. The next thing that I needed to get rid of was Tesla ETP and Coinbase ETP. And these were down massively, minus 20% both of them. So I've been holding them for long, and I thought the only way I'm going to get out of these is if I average down, put the distributions back in, average down with my own money as well. And since I've been doing that, I've added nearly 800 shares. I had 2,000 shares of each. I'd added nearly 800 shares of Tesla, and I'm down to minus 5% now. And I'm guessing next week this will be even less because Tesla's just gone up again today, and it's usually delayed a day. So I'm thinking within a couple of weeks, these are going to be looking green. Once I've done it with Tesla, I'm going to do the same with Coinbase, get this green, and then I'll be happy. So we've got Tesla ETP, we've got 2,791 shares. We are down minus 5.03%. So that is a capital loss of £5,585.81. The realised P&L is £2.02, and the dividends received so far are £4,724.85. So I've had these over a year now, or very close to a year. I don't know the exact dates. I'm sure we were buying them in September last year, round about that. And I mean, I'm still down minus 5%, so that just said it all, doesn't it? So yeah, I think the plan is to get these two, Coinbase and Tesla, green, and slowly reduce the allocation and replace them for safer assets such as JEPQ, YMAP, FEPE, these kind of assets. I really like these kind of assets to build the basis of my portfolio, which is going to pay my bills for the rest of my life. So this is kind of what I want to do with these.
In the past, I've had quite a lot of questions asking how I actually keep track of all my payouts, my dividends, and my portfolio snowballing each month. I use Snowball Analytics. It pulls everything into one dashboard so I can instantly see my cash flow strategy is really working. If you want to try this for yourself, I've got 10% off for you. Just use my code Cashflow King below. Links in the description. All right, let's jump back into the portfolio review.
So next up, we have Coinbase ETP, which is the worst one. So we have 2,001 shares. And then we are down minus 14.62%. But remember, I haven't averaged down on these. I just let them ride, and it's not gone very well. So on capital loss, we are down £7,782.31. The realised P&L is £2.62, and dividends received are £5,697.49. So yeah, that's my plan. Average down on Coinbase and Tesla. Get those to green to a position where I'm willing to sell them and swap them out for some safer assets. And then another one I did want to speak about is MicroStrategy ETP. There's a lot of people who was panicked when this has actually gone down. And I want to show you something that if you understand this, you should be buying this with the incentive that you like MSTR. If you're buying this just for the yield, then there's no wonder you're panicking if it goes down minus 20%. You shouldn't understand what you're buying because this is single stock risk right here. This is one company where it is down minus 20%. Same way, if you look at MSTP, down minus 18.55%. And the same time frame, MSTR is down 15.87%. The reason MSTP is down is because MSTR is down. There's no two ways about it. And if we look at it on a total return basis, you're best off owning MSTP at the moment than MSTR. The total return on MSTP is minus 12.95%, whereas MSTR's minus 16% because you're getting that income to offset it. In my eyes, there's no reason to panic because I know why MST's gone down. It's because MSTR's took a minus 20% drop. I own Misty because I understand that I'm taking a risk on MicroStrategy. The reason it's gone down is not because of the strategy that Yieldmarks are doing. The strategy works. Look at how it's done in the last couple of years. You've got Misty what's up 200%, Nvidia's up 200%. It's all the same people trading it. Scott Snyder. There's nothing wrong with the strategy. It's just the underlying has gone down. And I think that's the risk you have to understand with these. I just wanted to get that out there and clarify that because I know a lot of people in the Discord have been panicking, and I know some people have seen it gone down 20% and think, oh, I'm going to sell it. So hopefully that will help a couple of people out. As you can see right now, MSTP is down, but I am not worried one bit because I've got faith in the team at Yieldmarks. I've got faith in MSTR going back up. I think MSTR will go back up fine. I think this is just a blip. It's pure single stock risk. And you have to understand that when you invest into a single stock ETC or ETP. So we've got 352 shares of MSTP, down minus 21.65%. That is down on capital loss, £1,912.57, and dividends received so far is £162.44. Just bear in mind, today is the dividend payment date, so I have just been paying £300-ish today, so that obviously got to go on there, but it's not showing on Snowball as of yet because it's just been paid. So let's have a look what's gone off today. As you can see, Tesla ETP is up 6%, really nice. So you can see some of these income shares products are actually catching upside. We've got MSTPs up 2.25% today as well. YMAP's up. So let's have a look at the dividend calendar now, see what we've got on here. So we've got income shares as dividend payments this week have just gone. To MSTP today payment, then next week we've got Main Street Capital payment. So let's have a look at the future payouts then. Right now I am on, this month is about £1,200 and next month is £1,300. So I haven't got that much further to actually get sorted. So £2,000 a month is what I want. We're on £1,300 now. So once I do hit that target, I'm going to be really happy, and then it's going to be swapping out for safer assets, keeping it at £2,000 a month while I'm growing my growth assets alongside of it. And then the ISA is just getting bigger and bigger and bigger every year. And the £2,000 a month is going to be the basis to cover essentials and bills every month in case I need it. And while I'm not actually drawing it out, it will be compounded either into more income or into more growth. And then the rest of the income is going to come from the US portfolio. So let's have a quick jump onto the chart. So I just want £24,000 per year. £1,667 fills the ISA every year. Just for inflation, the yield's about, let's just say 30%, keep it. I know it's at 35 a minute, but it's going to drop. So it's achievable in a year by 2026. I think that's a good goal, and that's what I'm going to really stick at for my ISA. As you can see, we're up £1,000 today. So 2.27% we've gone up today, this portfolio. Nice. Right, let's jump into some analytics then. Let's have a quick look. So as you can see, on a capital gains basis, we are down minus 25%. But when we add in all our distributions, we are actually at a total profit. And this is something I want to get down in the future. That's why we initially getting some growth in here, and then we could just draw all our dividends out. Right, so let's jump to the dividends tab. As you can see, the yield is 33.57%. The yield on cost is 25.12%. The annual dividends right now are £15,133.63, and the monthly income is £1,261.14. The target is 2,000, so we are not that far off really. Once we do start adding some growth in here, the account value is just going to keep going up, and that is going to be the main goal. So let's have a quick look, see how we're faring against the S&P. Let's go year to date, shall we? So it says, I don't think this is right, to be fair, guys. If you look, the portfolio is ahead of the S&P 24.52% year to date. I'm just going to leave that because I think that's wrong. Let's just have a quick look at some of the holdings performance on here, what I have got. So Main Street Capital is up 8.3%. We've got JetQ's up 6.8%, which is one I'm going to be adding into the portfolio very soon. I've got a tiny allocation in JetQ just for the ultimate income pie, but it's one I really want to add. Then we have FEPG, which is up 1.1%, YMAP up 0.25%. Then we have Smith, which is down minus 4.6%. Tesla ETP, which is down minus 8.6%. Coinbase ETP, which is down minus 8.8%. MicroStrategy ETP, which is down minus 21%. So guys, I'd love to know your thoughts. Let me know what you think of the UK ISA portfolio so far. The next step will be to get that £2,000 a month ceiling income level, and then from there start adding growth products into the portfolio. So guys, if you did miss the video where I step by step show you my investment plan for 2026, please watch that. It's on your screen right now. Leave your thoughts in the comments. I would love to know what you think of the new portfolio. See you later.